Welcome to Trading Lounge and the Australian report for Monday 17th of January. And just before we start, the little survey that we sent out, and very grateful for folks that give us written responses, and we've taken all those on board. And in a nutshell, this is pretty much how it sort of pans out here in terms of what folks are interested in. So I really need to sort of head in those particular directions and make those services better. So I'm going to make a start on that, and I hope to improve the service over the year. And one of the things that we'll do is upgrade our website. Maybe we'll build on the one that we've currently got, because we understand that, and I don't really have the time to learn. We're using .NET Nuke at the moment. I did start to build one in WordPress, but that means Marcy needs to learn that as well, and she's got enough on her plate. So I'm not quite sure what we'll do, but in one way or another, we need to improve things. So things like where stocks are found, what the stocks that Alessio does, they're very difficult to find a particular stock. And these particular stocks in this list that Alessio does, they are from, the list is about 120, 130, and we'll get that sorted a bit further. But they're Kathy Wood's ARK Invest ETF, so she's got quite a few ETFs, and because she does such a great job in researching, and it's all new, new innovative, disruptive stocks, and she does deep research and handpicks the best stocks within those sectors, and could be AI or robotics or nanotechnology or 3D printing and so on and so on. The new world, basically, and that's why we're tuning into that sort of space. Alessio is now going to put trades out on those stocks. So I need to get all that sorted as well. So that will take a good few weeks to get sorted out. But we're going to improve on the stocks there, and also the commodities are quite popular as well. So I have been putting a little bit more effort into that. So I'll continue to do that. And I didn't think they were so popular because I try to make 6 videos a day, but sometimes it requires a lot of attention, and sometimes it's just not in me to get through them all. So I normally drop that off, the commodities one, but I can see that that's the wrong one to drop off. So I'll put more effort into the commodities videos. And the Forex here, you can see that it's not that popular, but obviously some folks are using it. And what I've decided to do there is put the US dollar index into the commodities, the Australian, because we've got to drop all the charts from this, unfortunately. It's just not sort of panning out. So I will make video the Australian dollar will go into the Australian video, and I'll put more time and effort into that. And I think that will be more helpful because we'll be able to look for trade setups, and it'll just be more helpful. And the euro is one of the most, probably the most popular. So I'm going to put that into the European indices video and make that a European video, and probably put the bonds, the Bund in there and so on, and sort of build on that a little bit more in one way or another. I'll get a bit more feedback on the folks that are using that. And the crypto, I can see that needs we made an effort last year because we put Alessio on and Kitty upon onto the to Trading Lounge, and Kitty Pon's been working the crypto. I can see that we need to improve that in a few ways. In the feedback was needs updated over the weekend, and eventually probably we'll look for some intraday updates as well, maybe just on the Bitcoin and Ethereum or something of that nature, and maybe Kitty Pond could do that, or we really need to find an analyst that's in the good Elliott wave analyst that's in the US side, because Kitty Pond's in Thailand and Alessio's in Italy, and I'm in Australia, and most of the volatility is from the sort of US. So, but anyway, we're sort of heading towards all of that, so that's where we are at this point with it all. So I just wanted to thank you for your feedback, and that's been good, and we take everything on board and we will steer the ship in the directions that you've mentioned. Alrighty, Australia. Radio. So I'm thinking that we're going to be coming down. In the way that it comes down, I'm not sure. It may be that we have this here as an A wave here and a B wave here, and then a C wave down on this wave 3 here, not coming as deep, but coming into some of these support areas like the 7.2 here, something like that, perhaps. Yeah, it's a rather complicated correction. It's not just a simple impulse wave where it's easy to make money. It's this is chop suey, this market. So, but I'm thinking that we'll stay on track to where we are, and I'm thinking that the little move up here that we've just had is a corrective rally, and then we'll start to move down. There's definitely going to be a bounce off number 3. We always get a bounce off 3 and then lower at that point. So let's go in, and this is the same line I'm taking with the US markets as well, and it's, I can see that there's a bullish case for everything, but yeah, we just got to be careful. So let's just cruise in and have a look at this. I mean, even if you don't trade the US video, it's probably good just to have a quick look at the NASI or the S&P and so on, and that will give you a bit of guidance for this market, because in the off hours, the buy futures are going to follow the S&P, and during the day here they may also do that as well, but they're also influenced by the finance sector. And if this is going to move down, then it's going to put pressure on the finance sector as well. So we'll see how CBA holds up above the 100. So I was looking at this being 5 waves down here with an A wave here, B wave here, and 5 waves up here. Last time we spoke, before I got my booster shot, which sort of knocked me around for a day or so. I think we're about here looking for the 5th wave up there. So we've got that 5th wave, and the move down here counts very nicely as a 5-wave structure. So we're looking for a move back to the 50-60% retracement level, and then a move down from that point. Yeah, like I've said, if we were going to go long with all of this, we'd need a nice classic. We'd need the 75-100 retested, as the support, and we haven't had that yet. So yeah, we'll keep an eye out for that in case we're wrong. Let's just go in a little further here, the next step in, and we had this as a bit of a short trade here, but that's probably not much use. But just like to go back over my mistakes and things. So yeah, we could have a wave C down through here, but it still means that we need to come down further. So we can also put this wave 3 here as well in this case. But what we are looking at, do I have that there? Oh yeah, we can use these over here. Use this. Gotcha, that's there. I mean, if this is correct, we're going to get these 5 waves here. So I'll just pull these down here. They don't need to be there for the moment. And pretty unlikely is a wave 2 at this point, but I'm just going to, I'll leave it there because we had it as a bullish count up here. Yeah, so pulling up into the box and then dropping from that point. And as I mentioned, we can count this down if I can remove these now, and just because we know what that is. We've been there, done that. So over here, we can look at it like this. That's how it counts there. I'll leave you to sort that out. But this is what the US markets, the US indices have been doing. So now we're looking for a little A wave here, B wave back again, and then the C wave up here into that box, which is the 61.8%. We'll be looking at from that high to that low, 61.8%. And then moving down. So we'll see how this goes. If if we end up too far above here, then obviously we got it wrong. But at this stage, we're just looking for 5 waves up to the 61.8% mark here, up into the, you can do that on your own platform, but yeah, up into that 7440 area, and then working lower at that point. Let's move into the tick chart and just refine this. But just before we go, so you've got a bit of an idea, we're looking at an A and a B and a C wave here. So we did get those 5 waves. So that's good. I mean, we could look at it as up for 1 here and then back for 2 here, but I'm getting 5 waves here. And also 2, I didn't really get 5 waves here. I could squash it in and go 1 and 2 and 3 and 4 and 5, but doesn't really resonate with me that well. And also here too, we've got a 3 wave move here. So I think I'm on the right track with the A, the B and the C here. I mean, it hasn't been very good trading for folks that follow this. So I'm just going to remove this now because it's probably a bit useless. But I think somewhere that's like the 7.4 there. At worst, if that 7.4 becomes the resistance, then you can look to short at that point. That would be a reasonably safe bet at that point. Let's go to the tick chart, 100 ticks. And we'll just bring in a bit more data here. So just from the top here, counting 5 waves down here, and then the A wave, the B wave, and 1, 2, 3, 4, 5 for the C wave over here. And I've got this trend line drawn down from the top here as well. It might prove handy, it may not, but I'll put it there anyway. So because sometimes the market works around them, you know. I'm sure it's going to play out. So yeah, from wave 1 here, we're focused on the ABC rally, which is the A wave here, and then the A, B and C here. It did drop below here. B wave could do that. It did that on the S&P 500 too, but on the NASDAQ it did not do that. It stayed well above. But we're still going to look at it like that. I think that's the best way. So it's still got 1, 2, 3, 4, 5 here. Not very clear 5-wave structure there, so I'm happy with that. I mean, could it be down for 1, back for 2, down for 3, 4, 5? Possibly. That could kind of work. Anyway, this 7440 area here is what we're looking at. Now from here I can count 1, 2, 3, 4 and 5 for wave 1 and 2 here, and then 3 and then 4 here. So I'm thinking that wave 5 here really needs to be, because if wave 1 here looks a little bit longer than wave 3, I haven't checked it, but let's just put that there. Let's just grab that, move that, pop that there, and that would pretty much get us there at that point. So we really want wave 5 to be a bit smaller than wave 3 at this point. I don't know if I need to put wave 4 over here or not, like having an A and a B and a C wave to here and then one more push to the upside. One of the other places we talked about shorting under this number here, and that all makes sense. So you can do that as a classic trading levels pattern here. You'd need to see the first low below the level, then the retest, and then down here. That's a place you could add to that. But what I also wanted to say for a safe trade is that if the market trade, this is at 7400, then we got 10, 20 and 30, which is all group 1, 1, 2 and 3, already simple. If the market gets up into the box here and then it comes back and it finds the number 2 here, the 74.20 as the resistance, then you can short at that point too. But you also have to wait for that as well, because sometimes if the market's going to be bullish, it will come down to the strongest number, which is 5, and then it can just move back up from that point. So you have to be really careful. But if it comes back up and if it just comes down to 8 or 5, but 5, then we can use that that low there to move in as a reasonably safe trade as well. So these are all little spaces that you can build into. Steady as you go, Captain, kind of thing. And it will get bouncy in through here. They do bounce around the levels a bit, so they would be sort of safe things in here. Otherwise, you could just, if it spikes up here to take out stops and things on the morning squeeze, then you can look to, you know, short in that box. But I'll leave that up to you. The opening is how you trade the opening is something that you need to develop over time through observation and understand how things work on the open. And I mean, I'm just trying to think a little bit about that a bit. I mean, I was brought up on futures when I first started with a Japanese company, and then I moved to Australian futures and US futures contracts, and that's all that we used to trade, you know, for clients and ourselves and all that sort of stuff. And so the ASX market was a place where, before the Sydney Futures Exchange, you know, it wasn't owned by the ASX at that stage, and in those days we could see the brokers, which brokers were buying in lots on the all around the open, and there was, you know, 2 or 3 firms, and we could see, you know, which firm was putting in the most orders and how it was playing out. You could actually see their broker number, but when the ASX bought that business, the Sydney Futures Exchange, they took all that away from the retailers. So well, that was the day that the sort of closed off. Then, you know, if you're an affiliate member of the exchange, then you can see that information. But if you're not, then you've sort of not trading totally blind. But, you know, you can still see the volume in the futures contracts, volumes coming in and out. And you can see how the retailers get squeezed, and you can see, or the best you could probably see, is lots of orders. So lots of, you know, 20 or lots of 50s coming in, or lots of 100 coming in, and those people test the market, and they can see all the retail orders, so they know how many orders are there, you know. So if there's 300 you know, contracts that, you know, the US markets are up, so the retailers come in, and they all come in and thinking the market's going to go up, and they come in with, you know, 350 orders all added up together. Well, then, you know, the company, I always call it a poker table, the companies that are looking at those retailers going, okay, well, there's 350 orders, let's match, you know, those. We'll put lots in and we'll match them all up to 350. Is there any more? Okay, well, let's sell 100. Let's chuck in another 150 on the short side, and let's see if anybody else is there, or any other wholesalers. Where's Macquarie and where's Morgan's and those guys, and then I'll put in another 150 on the short side, and there's still nobody there. So then I'll come in with another 150 and squeeze all those retailers out on the open, and then the market goes up. So you get that squeeze there, and that's how it works. So, but yeah, anyway, it's all there. Okay, moving on a little bit. So if this moves up here and then moves down again, then this is what you can do at this particular point in time. If the 74.50, which is above the thing here, if that finds a nice support there, then you could start building to the long side, because that's the point where I'd have the Elliott count wrong at that stage. So a nice classic trading levels pattern to the long side. Also looking to build in on top of 72 here. That would be the other place, and then of course on top of 75 here. Don't make too many decisions in this around the 75. Make sure that you're clear and you're going for the longer term move to the upside if that's going to be the case, because and then add again on top of this up here. CBA on all of this is, so with CBA here, we've been looking for the A, the B, and the C. I thought there may be one more little move up here, and there certainly could be. It does look, there's the possibility of a little triangle pattern happening in here. So it's possible that there can be a little bit more of a dance here and a push up to finish this wave C here. So I don't know if this is going to be here, and we could be bullish apart from that too, but we need that top to come in, because I could only, and we go long here, but once that top is in here, then we can go long on this, on the 105 and continue to the upside. The other point here is that this can also be topped out here as well in this space. So we could have a top there, and if that is the case, as an A and a B and a C wave up to that point, then we've just been waiting for the downside to come, and we need the 100 as the resistance for that, and we don't have that just yet. But let's just go to the tick chart and just sort of talk about that a little bit more. The triangle pattern would be wave 3 here, with an A wave, a B wave, an A, B, C for the C wave, and then we would have here some sort of D wave coming in 3 waves, and then an E wave coming in here in 3 waves, and then we could go up at that point. Now I don't know if that's the right pattern at that point, and then this long trade here would bring down to wave D here, and then we could bring it down to wave E here, because at that point, if that's not the case, then it would just continue to move to the downside. Now it can just from this move here, it can have a little ABC rally here, and then move down through here, and we can look for the short trade as mentioned over here for that on that side. Looking at the beta shares fin section, we can see the same consolidation here that we've seen with CBA as well. So it's sort of dropped here. Because it's dropped and then it's vibrated sideways, that's corrective pattern. So this is a good example here. When a market moves up and then goes and we get corrective moves, gets overlapping wave structures, well, that's corrective. That's a bullish corrective pattern. That's a continuation pattern. So when the market moves in that direction and has that vibration, well, then it's going up. When it comes down here and it's doing the same thing here, then it's likely to come down at that point. So once again, I could put wave 4 over here, but I'm not sure what this is. It's not really giving me a nice 5 waves. I can look at that as an A and a B and a C wave here. Once again, we can go long above this top here, as an ETF here for all of that. But we're not there yet. But I will keep an eye on that for us. So we could use this as a way to trade the banks, so to speak. So I mean, the trouble with all these things, be it BlackRock or Beta shares or IBE shares or this and that and all the rest of it, I mean, you have to understand you do not own the underlying stock asset, rather. So if Beta shares, for example, went belly up, then you lose all your money. It's that simple. That's the risk. So, if the big market crashes come and all the rest of it, you need to, run run as fast as you can away from these sorts of companies, because you don't know how leveraged they are out in the market. I mean, if you've been around long enough, you've seen many big firms drop, especially when they start playing the market themselves. And that's the same with brokers. When you choose a broker, you do not choose a broker that trades trades the market themselves, because you know, Man Financial's a good example of that in Australia, if we're talking about that. And there's many more smaller bucket shops used to use clients' money to trade themselves. So yeah, you want a broker that does not trade but just executes orders, put it that way. Okay, so yeah, not too sure what's sort of happening here just yet. We'll see how this this breaks, but the wave 4 is a good case. But the thing here is that this move up here is corrective. This looks a bit impulsive. That looks a bit impulsive. This is definitely a corrective pattern. So it's kind of pointing down, but at the same time it can be this triangle pattern here. But I'm just sort of guessing. I don't know at this point. So let's just see how this plays out. Okay, over to the resource sector, and iron ore was down 2.5%. So we were if you remember, we were looking at this here as 1 and 2 here, and 3 and 4 and 5 going up here. So you can see that we're sort of correcting from that point now. Because I was thinking that this is 5 waves in this little move here, then pulling back here. And then I was thinking this is 1 and 2 here, and all the way up for 3 here and 4 here, and then 1, 2, 3, 4, 5. Now, this could just pull back 61.8% here, and then continue to go up again here for that. So that's one thing that we need to just sort of understand at the get-go here. So that could just pull into this space here and then continue to the upside. So I'm just going to clear this mess up. So it can move to here and then build another third wave on here. But otherwise, everything's said and done. If it doesn't do that, well, then we've got, which is a good case, because, you know, BHP and Rio and all that are moving along nicely. But at the same time, we may see this correction come back into this space as wave 2 or wave B at this point. So we don't know that either at this stage, but I will put wave B here. But I think the another important point here is that because we got 5 waves here in the opposite direction of the trend, the last trend was to the downside, because we've got 5 waves here, we are going to see some type of correction here and then another 5 waves up. So I don't know if we're going to pull back to here, or we're just going to pull back to here and then go up. So I don't know if we're going to get some sort of A wave in 5 waves, a B wave, and then a C wave here, and then up. That could take a month to do that. So that downward pressure here for the month is certainly going to, well, add pressure to iron ore stocks directly as such. So FMG, Rio, on that case. I do want to have a look at, just before we go into the other guys, I just do want to have a look at Newcrest Mining. I've been keeping an eye on that. This is the weekly chart here, and we've got a wave 3 up here with an A wave, a B wave, and then a C wave down here. I'm just not sure how this is going to finish off here. I know we got 1 and 2 and 3 here and 4 here, and we can look at this as 1 and 2 and 3 down to here. I won't go into that too much, but what I'm thinking is that we may have this, we could have this low in place here right now, right? But the other side to this is that this can be a little A wave, a B wave, and a C wave here, just coming up here, just making the top out here like it did in the previous effort, and then come down for wave 5 and then move up here. That's the worst case scenario here, or otherwise we sort of will head up higher here. I'm just going to go to the daily chart now, because really what we want to do here is that it's been snaking along here and diminishing at the same time. Now I like it when they've been under the level and then we get a classic trading levels pattern above the level, and that's fantastic. We can go from that point. That's it, you know. We're seeing good volume come in, everything's pretty good at this point. So we just sort of need to get organized here a little bit. So yeah, from wave 3 to wave 4 here, looking at this as wave 1 and 2 here, and then down for 3 here. Now I can look at this being the low at this point here as well, so I should just put that there. There's a good case for that, and we can look at this. I know that's 5 waves up there, so then this would have to be an A wave, a B wave, and a C wave down here for this. So it can be, you know, we can start here as wave 1 here for that, and wave 2 over here. So there's some bullish counts here. So the only thing I'm sort of thinking here is that if this is wave 3 here, this becomes an A wave, a B wave, well, an A wave, a B wave, and a C wave here, and then comes down here for this, down into this wave 5 here. But if we get a nice high above the level here, then we'll start poking around at it, looking for trades in here, and we'll just start the first trade off small, and then as we get confident in it, or if it does, you know, follow through on us, well, then we'll be, you know, we'll be cranking it up at that point. And the thing is that we'll be in at the beginning of, you know, a massive trend to the upside here. Because when you think about it, coming back to the weekly chart here, we should be taking out these tops here. So Newcrest should be closer to $50 up here. So we can move that up to here and that up to here. That's where that should be. We've got a fantastic accumulation process in here for all of this. So anyway, it may be, look, we may get lucky and it'll be sooner than we think, or it's going to be later than we think. So anyway, we'll just, it's going to look bullish, but just do not overtrade, because we may get that move down here and you'll have to accommodate that. If you've got shares like I have, then it's not a big deal, okay? But if you've got leverage, you need to be sure. So, you know, you need more patience for all of that. But look, it's all looking pretty good, I have to say. Yeah. Alrighty. Over to the other chaps that we normally look at. So, BHP here. So if I've got this right here of 1 and 2 here, we don't need that little position in there. So if we got 1 and 2 and 3 and more in there, let's do a bit of housework on the way. 1, 2, 3, 4, 5 here for the wave A, or wave B here, wave 1. Then this move here, all of this here is going to be wave 1 as well. So all of that is a wave 1 and 2 here, and all that is a wave 3 here, and a 4 here, and a 5 here. So it's more likely that we've got wave 2 coming into play here now, all of this, and this wave A will need to go over here, and this wave B will go over here, and wave C will come down here for wave 2. This is more likely scenario at this point, because it's the length of the third wave here. If this is all 1 and 2, and this is going up for 3 here and 4 here and then 5 here, then we're going to be further up. So we'll be, the next level up here, of course, is 65. So that will be the next level at that point. So we're getting to a point that, but the other point with all of this is that all of this move up here will just become wave 1 here. So if I can just remove that for a moment. So when we finish with all of this, this will just be wave 1 here, and then we'll be coming back for wave 2. So we won't be missing a lot in all of this. And all this scenario here with wave 1 and 2 and 1 and 2, this ties into copper that we've been working with, and nickel and so on. I mean, Australia's not big in nickel. Indonesia supply 85%, 84% of nickel to China, which they just stopped. Indonesia stopped delivering coal to them, and now nickel as well. So supply chains will be tightening up. So yeah, okay, moving onwards. Sorry about all that. Rio much the same as well. We'll still play out the B wave here in all of this. You know, once we get to the box, we'll see what we've got at that point with all of this, and I'll do some work on it. But it's still got work to do to the upside. The strong bar here was on higher volume, even though we had an inside bar here. It was on lower volume. So lower volume means corrective pattern, not a change in trend. So we'll still be pushing higher. The 110, the 1 is the strongest number. So I mean, we've got 100 here, but even just the 10 here is the strongest number. So we're going to be gripping here for a little while. And we'll see more corrective activity here, but eventually it'll push to the upside here, and we'll get a better understanding of all of this at that point too. So yeah, and FMG, so with it's kind of stretching itself out here a little bit. It's struggling to the upside, and with it's getting close to that 61.8%. And you know, I kind of expected a classic trading levels pattern here at 20. So the arrival, the reaction, the first high above the level with 5 waves in it. And now that iron ore's pulling back, then we're likely to see this pull back at this point. So hopefully we'll get another setup on this leg over here for this. So a bit of patience required for this. And the Australian dollar, so slight change in that. We've had this pullback here for this. We're seeing this is the US dollar index that's pulled down here. We've had wave 3 here, and we can see that all this is corrective here. So this is a wave 4, the 38.2% retracement level is around the 9.5 here. There may be one more little low to come in here, I'm not sure. It just depends how we tie all this in through here. But 1, 2, 3, 4, 5. So I'll just see how this plays out here. But that's what we're up against here. And if this is correct, then we're going to be going up here further. There may be one more move down here, and then we go up, or we go up from this point. I'll need to look at that a little bit later on in the day. But that means that that top would be in place there. So we need to talk, because I was looking for 5. I was looking for if this was going to be, if that was going to be the A wave, then the wave C would be sort of roughly the same at this point in that case. So it looks like this, we need to look at this in a couple of different ways now. So first of all, we could continue with our move to the upside, but here we need to look at this as a triangle pattern here, the same as we've done with this market, the dollar index here. So a triangle pattern in this space, right? So that would have to play out like this here. So instead of just an A, B, C as I had it, we have to add this as a D and an E. And the reason for that would leave us with 1, 2, 3, 4, 5 up here. Now that's either wave C of B up here and we're done, or we've got this whole move up here as wave 1, and then wave 2 pulling back here, and then we'll go up for wave 3. But that would be against the US dollar index at that point. So that's probably a little bit unlikely at this stage. So it looks like we'll be coming down here further at this point. So let me just check on the hourly chart here. That's the same. It's if we take it from, if we look at this as the A wave here, the B wave here, then 1, 2, 3, 4, 5 here, we can look at it as wave 1 or the C wave. We'll probably have to put the C wave here for that. But I also came up with another count that I kind of think suits, plays out with the US dollar index a little bit better, and it's this count here. And it just kind of, it just matches, it will match the behavior of the US dollar, because when you think about the US dollar index here, if that low is correct, or it has another low in here, whatever, it doesn't really matter for this exercise. But if we've got one more move up here, so to speak, this wave 5 of C up here, and that's the end of it, then we'll be coming down from that point, right? From around the 9.8, and this big grey box area here, that's the, the 50% and the 61.8% up here. So it's playing that out. It will poke up here one more time and then fade at that point. So if that's going to be the case, well, then the opposite would be here then. So in one way or another, we would have to come down and then we could go up from that point. So I was thinking that we could look at this as wave 1 here with an ABC for 2 here, up for 3 here, keep the triangle pattern an A, B, C, D, E in here, and then the 5 waves up here for wave 1, probably of wave A here, but maybe on the side over here is possible wave 1. I'll just push that to the side. Bit of a long shot, but I'll just grey it out, but I'll just leave it there so we're aware of it. And then we have our wave B come back here as an ABC pattern, while the US dollar index is pushing to the upside, and then we come up here for our wave C of B up here that we're originally looking for. So just a slightly different pathway. So what I wanted to do next with this is, as you can see here, it looks like we've got 3 waves down here. I want to see if we get 5 waves down here, because if we get 5 waves down here, then we're going to get 3 waves over here, and then we're going to get another 5 here. So we can't really trade this here. We could poke around with this, but it's probably a bit dangerous. But we can trade the C wave. If we get 5 here, that means we can trade this short, and we can also trade this up here at that point. So let's just see what we get at this point. And it kind of looks right, because all of this is kind of contained, you know what I mean? It's just in its own way, all of this. It sort of feels right. So anyway, we'll keep playing with that, and we've just got it as an alternative count, but it may come in the primary count. But I think it's worthwhile just putting on the table anyway for a bit of thought. Alrighty, thanks for tuning in. Cheers.